it's a long-term strategy where you want to be accumulating over time. You really want to spend time into diversifying into the right jurisdictions that you think are going to perform well. You think are going to be places where the majors that are facing a supply cliff very soon are going to be looking for to increase and replenish their production over time. So we haven't had that because a lot of the majors are not only constrained from ESG policies and so forth, but also very constrained by their own shareholders because they cannot invest on things that are not generating free cash flow right now. So, it's a very delicate environment that creates a lot of opportunities.
Golden Arrow Resources is targeting discoveries in a project portfolio of over 244,000 hectares, including epithermal gold in Argentina, high-grade copper in established mining districts in Chile, and a district-scale orogenic gold opportunity in Paraguay.
All right, welcome back to Inside the Markets. Hosted, of course, by StockPulse Media Network here. And I've got Tavi Costa. Tavi's a member and portfolio manager over at Crescat Capital. And been there since 2013. Was responsible for the macro part of the thematic, I guess, investment process part of Crescat here. So you've been around, Tavi. You've been on Reuters, Bloomberg. Your research featured. So you've been in the trenches quite a bit, or even played some D1 tennis here, I understand. So you're quite a seasoned guy here. So I guess quite a bundle to talk about here. But I guess we'll start at the top here. Big picture view here. With the overall financial, you got a war in Ukraine, you got record inflation, we're in the commodities sector here. How does Tavi Costa see this?
Well, I'm quite worried of what's going on with the economy because I don't think especially risky assets are being pricing things accordingly. And especially when you look at the earnings that are coming out right now, because right now I do think we're going to see a major disappointment on earnings release. And why is this so important is because I believe we're going to see consumer demand really falling off a cliff. We've had the consumption's been really driven mostly by government policy through fiscal stimulus that we saw back in 2020 and 2021 that drove savings rates all the way up to 30%. And now they're back to 4% and near historical lows. You got mortgage rates rising. You have the consumer sentiment completely collapsing. And so the combination of those factors should really be hurting consumer at some point, along with the historically high cost of living that most folks are having to deal with. And so it's hard to believe this is not going to be a big problem for corporate earnings. And when we get there, which I think it's going to be now, either from actual earnings or guidance that is about to, I think, really compress, then it's a question for labor markets because that's the next shoe to drop. And that will put the Federal Reserve in a very difficult position. So, I'm very focused on that part, on those risks, but also on the opportunity that we've seen so far in commodities, where I think this is not 2008 at all. I do think inflation is much more persistent and a big trend that will stay here for the long term. And so it's hard to believe inflation will go back to the 2% of the, target of the Federal Reserve and so forth. And so I think you want to be a buyer of commodities at this every time you get a dip.
Yeah, let's kind of get into those commodities here. I think on one hand, maybe there's a picture painted of not quite as much demand if we're in an economy that's bordering on recession / potential depression. I think we could probably argue those points here. But we're talking about a U.S. dollar that is just running right now. So I guess I'll kind of cut my question off there, Tavi, and let's get on to the dollar here because that'll probably help uncover the commodities here. But the dollar record levels here, gold and silver aren't really too off considering that bull run by the dollar. So let's break down the health of the dollar a little bit. How do you see that?
I've been always a believer of the dollar, even though I've been always an investor of gold and silver over the long term, because I know what the issues are in Europe and Japan and other places that also run very high deficits, but also have even worse debt imbalances than the U.S. But with that aside, I do think the same thing with interest rates. I don't think the world can really handle a sustainable increase in interest rates given the levels of debt. By the same token, you can use the same analogy by talking about, or comparison by talking about, the dollar. I don't think the world economy can really handle this level of strength in the dollar over the long term. This is not like the 80s at all, when we had the same level of strength in the dollar that caused the Plaza Accord in 84, 85, which caused then the price of the dollar, the value of the dollar relative to other currencies, to actually depreciate. And so I think we're getting close to some sort of coordination by central banks. I don't know if it's going to be an accord like we saw Shanghai Accord back in 2016 or so as well, but some sort of coordination of central banks to not allow the dollar to increase as much as it has been. I think every country is going through a changing policy from currency wars to now having to protect their currency value in order to reduce the pressure from inflation. Imagine if you are, a commodity importer. You're in real trouble. You better have your currency in the right place, otherwise you're going to be paying more for those imports, and your trade balance is going to contract. And so trade balances are not a problem until they become a problem. And now I think that that's going to be an important part of the discussion, is going to be how countries in general will really be able to sustain their own economies with a declining current account in a lot of the developed economies. Got Germany, who used to be a major exporter, now turning into an importer. So those things really create a risk for what we call hyperinflation, because that's precisely what hyperinflation is when you get very indebted and you don't have natural resources and your currency has zero credibility in the markets. And so you see the depreciation of that usually feeds into the inflationary problem. And so you're seeing that in Japan, Europe, and other parts of the economy, of the global economy. So I think we're getting close to some sort of coordination. We saw Janet Yellen speaking with the finance minister of Japan 2 days ago, and they already said that maybe there's going to be some cooperation. That's the word they used. And so I think we're getting very close to something along those lines. And the dollar looks very, I would say, extended over the short and medium time frame when it comes to this appreciation. So I don't, I'm not as bullish on the dollar as I was. We don't have the same level of positions we had in the past. And we've been hoping that I think that the market is getting ready for another move in other things like precious metals. I think they're starting to look more attractive here.
Yeah, let's dig into those right now. You just set the stage for the dollar here. I think we could probably go back and forth on the strength of the dollar, bad house or best house, bad neighborhood, whatever. It's the world mark. So yeah, let's price it to these commodities here. Gold, silver. Struggling here, but I think probably a solid level, but silver certainly sub to $20 here is a little alarming to me. So I guess break down these markets for me.
So there are two ways to think about it. You can come up with a thesis and say, well, look, if I tell you we had a 9.1% CPI rate on a year-over-year basis, and on top of it, you got interest rates at the levels that they are, would you ever think that gold would be trading or where it is? The answer is probably no. You think it would be a lot higher. And you can also twist the question and say, if I tell you that the dollar is making new decade lows, on top of it, you've got this move in interest rates, which has been very, highly correlated to gold, moving higher globally. In other words, global bonds have been collapsing despite this sideways move in gold. And on top of it, you had a Federal Reserve that is going from doubling their balance sheet, is slashing rates to zero, to is starting to increase rates and actually sell their assets in their balance sheet. Would you think gold would be trading where it is right now? And so there is the other side of this as well. And so I think, imagine as we get into a more recessionary environment, as corporate earnings decline and deterioration of labor markets will put the Fed into a real problem here. I think they're going to be in a box very soon with the deterioration that we're seeing in the economic activity, I'm paying very close attention to earnings release, because I think you can see a lot of clues from CEOs and other management teams as far as what's happening in the real economy. And that data is going to start coming in the next, call it 3 months or so from now. And so you have to really be focused on those leading indicators, and some of them are a little subjective. And so, but also the price behavior of most of the companies that have been reporting earnings, which has been dismal so far. And so I'm very, very focused on those, because I think they're going to impact policy and will actually become a tailwind for things like precious metals at some point here. Precious metals have been, gold has been consolidating for a real long time now, 2 years or so of a consolidation after making new highs. We've had a consolidation, and then it hit new highs again over with the war, or very close to it. And now we got another pullback. And so gold is trying to make that second wave, which tends to be the most violent one that brings everything higher, silver and the miners, the juniors, and so forth. I think we're getting very close to that. So as a portfolio manager, we've been very focused on adding to our positions and owning the best quality assets we can with businesses that we think are completely mispriced in this environment. So it's quite interesting place to be right now, because I think there's a lot of opportunities now.
Yeah, let's get into those opportunities. That's what this show's about, getting people ahead here, Tavi. So a lot of people want to know what you're thinking. Junior resource sector, I've been in it for quite a while. It's a very painful game to be in. When it's good, it's good. When it's bad, and it's mostly bad. So you painted a picture of it potentially getting good again. This is supply chain here. These guys and gals are under enormous pressure right now from these markets. Can't get financings done. Yet the labs are backed up. It's busy. So I guess how does a portfolio manager who deals in this sector, how do you see this sector?
As far as the positioning goes, it's a much more static position than anything else macro-wise that we have in a portfolio. So it's not like we're trading in and out of those things as much as we trade in and out of macro positions. And so they're much more static. We're also, most times we're adding to our positions. We're just making sure we own as close as we can of 20% of those companies that we think are going to be delivering incredible success in their drilling results, and some other development stories too. But in our opinion, we're at a stage of the market where you're able to find discovery stories that have put out incredible results that are trading at sub 20 million market cap, which is something very unusual. And given this macro backdrop, it amazes me that you have this opportunity. I think we're going to look back years from now and we're going to be like, wow, I mean, why no one really took advantage of all this? And so to me, it's a long-term strategy where you want to be accumulating over time. You really want to spend time into diversifying into the right jurisdictions that you think are going to perform well. You think are going to be places where the majors that are facing a supply cliff very soon are going to be looking for to increase and replenish their production over time. So we haven't had that because a lot of the majors are not only constrained from ESG policies and so forth, but also very constrained by their own shareholders because they cannot invest on things that are not generating free cash flow right now. So, it's a very delicate environment that creates a lot of opportunities. So now we've got over 80 investments in our portfolio. So it's a very diversified. And I would say that we got over 30 to 40 companies that are in a very, very good position to be returning, I think, really good results here in terms of their exploration projects that are going to be running here in this season. And we're very excited. I think we've got some major, or I would say world-class discoveries that will be most likely are off the radar of most people, but also going to be surprising a lot of investors as we get into the later stages of the year.
Yeah, let's talk about some of this. Drop some knowledge on some investors here who maybe don't have the assets you do in the research team. What looks good here? Exploration stories are a tough one here with capital being so hard, but yet they're the most important ones of all. Are you targeting anything specific here, or maybe point somebody in a direction?
I will mention one company that I think is probably going to be in the exploration realm that will not only has a ton of optionality by having other projects that also have incredible potential to be world-class discoveries, but it's one called Snowline Gold in the Yukon. It's a higher market cap than most other companies. We've had recently invested, upsize our investment in the company. We own a little bit over 20% today of that company. It's a company we think, in order for us to do that, it just goes to show how much conviction we have in the name. It's just a well-run company. They put out incredible results in the prior year. They had a good run on discovery holes. They've got other discoveries in the same company, which is very rare to see different discoveries in one company, but that was certainly the case here. And we think they're onto one of the largest gold discoveries of North America's history. And so, stay tuned for that one, because I think there's a lot more to go. It's a very early stages. They're going to be putting out results here soon. And we think it's going to be very meaningful for the entire industry. So sometimes this industry throughout history, it takes one or two stories that are very successful to take the whole industry to turn around. And this could be one of those. It has that potential. So we're very excited about the story. We are shareholders, and we think, obviously, we're biased, and we think it's going to be an incredible discovery here.
Okay. Well, Tavi, how do people follow your work and get a hold of you if they'd like to, or certainly keep in touch?
Well, they can follow me on Twitter at Tavi Costa. They can also check out our website at Crescat.net, where we put out a lot of letters and research that you can follow very closely. And on YouTube, if you type Crescat, you can see our videos every Friday where we do some macro analysis along with some geology talks with Quinton Henney, where we offer some views about the companies we invest. Yeah,
very interesting. I watch those myself, so I appreciate it. So, Tavi Costa, appreciate the time, and look forward to keep an eye on your work and have you back and see how some of these calls look.
Thanks for having me.